Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to go through and have a look at how the day unfolded yesterday, which was 4th of June, on the ES, to show you the logical way we approach trading the USE minis. So very good day yesterday, where we go through all the different criteria that we teach in our advanced webinars. So let's just go through this. So first of all, let's set the context of the day. You can see, if I zoom in, at the bottom here we get a little message saying it's an outside gap down. What does that mean? Well, if we look at what the high, low and close was of the previous day, we can do this very easy by indicator here. If I zoom out, you can see this was the low, the high and the close of the previous day. When we actually opened yesterday, you can see that it gapped down. In other words, the whole of the first 3-minute bar was below the low of the previous day. This indicates the market is weak. When this happens, we then have to think slightly differently in the way that we normally approach our MTPredictor higher time frame support and resistance zones. Let me show you what I mean. If I go to the 15-minute chart, normally what we do is we go back to our prior pivot. In fact, I'll just take the high-low close lines off now. We go back to our prior pivot, which is here. We right mouse click, we place our DP level on there. The market gapped through that, so that one wasn't relevant. We take that one off. We then come back to the previous one, which was the last swing into the high there. Right mouse click, place our DP level on there. And you can see initially it appears to be support. And if we look at our 3-minute chart, that's what it looks like on our 3-minute chart. In other words, it looks to be 15-minute support coming in here, therefore the large degree trend is up. However, we know from experience that an outside gap down usually retraces back a small way, and if it cannot fill the gap, so if I put these back on again, what do I mean by that? It means going back to the previous day's close, which in this example was 21.1650. So if it cannot close the gap by around about 10 o'clock, the normal time zone is perhaps quarter to 10 to quarter past 10, then the market is going to roll over and go to new lows. In other words, if it cannot close the gap by that time zone, this DP will not hold. So we know that. That happens about 60% of the time, maybe slightly more. So we know that this DP is no longer going to be support. The market's going to move down to new lows. This TS1 sell came in here at, well, the high was at 10.12, so it's just right in our standard time zone. So in other words, we're anticipating that this is a sell. The market is then likely to go down. It's likely to go down to new lows. Therefore, this TS1 sell is a good one to take. Oops, just missed the red sell bar. Market goes down to the first target there for a nice plus 2.8R profit. So that's the first one, plus 2.8R. But do you see how we knew that this 15-minute DP zone was not likely to hold? In other words, this was likely to fail, and I mean by fail by, in other words, being breached to the downside because we had an outside gap down. Let's now take this high-low close off. So we're finished with that. So there's our first trade, a lovely short trade right from our window of in time when we're anticipating the market to roll over down for first 2.8R profit. Let's take everything off now. Market trend is going down. We then have a DP buy set up here. If we place the DP off from the previous low, we can see we're in around potential support, so this may be one that you would consider. Let's right mouse click, place the analysis on. The market goes up sideways. However, now we must again review the larger degree trend. So for this we go back to the 15-minute chart. I'll place back on our previous DP that we had on our 15-minute chart, which was here. Now this is a very important point. I'll just take that one off to avoid confusion. Is that once we have 2 consecutive closes beyond a DP level, the market trend is deemed to be continuing. So at 11:45 this bar was close number 1. And then at 12 o'clock, this bar here, close number 2. Can you see they both closed below this DP level? Therefore, the large degree trend was deemed to be down. So after 12 o'clock, large degree trend was down. So what does that mean for our current long trade here? So where's 12 o'clock? 12 o'clock is on this bar here. So we now are in a long position, but the large degree trend is down. So what do? Well, our first opportunity, we can either bring our stop to break even when we get to our 100% initial risk level. to therefore be stopped out for break even, or when this TS3 sell comes in, we now know the large degree trend is down, therefore we could stop and reverse our long trade, and if we did that, we'd come out with about 0.4 profit. So I'm going to call that break even. Let's just clear that particular trade setup off. There we go, to clear the analysis. So of course this TS3 sell now comes in. This is now in the direction of the large degree trend to the short side. So you're happy to take this. The market goes down. It goes down for a nice 3.1 profit. So there you go, another profitable trade, 3.1 profit. Very good so far. What happens then a bit later in the day? You can see we now get a sell set up here. Just clear this off so you don't get confused. We now get another sell set up at 14.18. But what's the large degree trend? Again, for this we go to our higher time frame chart. This DP has been breached. We then go back to the next pivot low, which was way back here. Right mouse click, place that DP on. That gives us our next level of support, and you can see that came down and held the low of the day absolutely perfectly. There you go, the low of the day coming in beautifully. Again, that level would have been on the chart in advance. So as you were short off this TS3, you knew that large degree support was coming in down here. Just going to take that DP off, it's no longer relevant. Right, so what does it mean about this this sell setup here? Well, it now means that the large degree trend is up off this DP here, therefore you'd avoid this sell setup. You'd now be looking for long trades. You'd be looking for long trades because the large degree trend was up off this 15-minute DP. We then had a buy setup here. The market took you in, took you out for a loss. Yes, losing trades can and do happen. It's important to understand that. However, because we use correct position sizing, this loss would have been just -1R. So we put that down, -1R, as that was then a losing trade. Now, of course, it would have been nice, as we did get a nice rally a bit later in the day here. But this is why we don't just follow the 3-minute chart. We also have our scanner running to follow the 5-minute chart. So when we go out to the 5-minute chart, you can see we actually had a TS1 buy setup here. Therefore, this would be a good one to take because we're looking to be long after this large degree low. Now, because this is a large degree low, this is the initial rally up. It would be a wave 1. This would be the initial correction down, a wave 2. Therefore, we'd play this as a potential holy grail trade setup and we'd be aiming for our typical wave 3 WPT. Market never made it. You'd have come out on the close for approximately plus 3.6R. So another good trade. So 3.6R profit there. So do you see how by logically going through the day using our higher time frame DP support and resistance zones, we can gauge what the large degree trend is, and as such that we can then decide which direction to trade in. The only exception on that is when we have a gap, an outside gap down or an outside gap up. In other words, the market gaps where the first complete 3-minute bar is above or beyond, completely beyond the previous day's range, as in this particular example. When this happens, we know that any support in and around that area is likely to fail and the market is likely to continue down. It's likely to continue down either immediately, which it didn't do in this case. If there's a rally, this rally is likely to go up to the previous day's close. If it doesn't go to the previous day's close, in other words fails to close the gap, it's then likely to roll over and make new lows in this case, and that's exactly what this TS1 sell setup gave us right in our 9:45 to 10:15 window. So that set our initial trade, which caught the very high of the day, therefore our TS1 sell setup nailing the high of the day. Large degree trend was down into the next 15-minute support zone, which as you can see nailed the very low of the day. Again, that would have been on your chart in advance, so you'd have been prepared for that. And you got two nice short signals. You may well have had a break-even DP trade up there. You then had a losing long trade. The loss was kept small, and then on the 5-minute chart, as we've seen, we had a good profitable trade there as well. So let's add up the result of this. So it's a 2.8R trade, plus a 3.1R trade, then a -1R loss, plus a 3.6R profit. Overall, that would be plus 8.5R profit overall. So 3 profitable trades, 1 losing trade for the day. So a very good result overall, and particularly where we managed to come off the high of the day, nail the low of the day, have some great trades in between as well. Other markets had the same. If I look at the NQ, exactly the same. It was an outside gap down, you can see there, and there was our TS1 sell right off the high of the day there, which would have had a nice profitable trade, in fact slightly more than the ES trade with a plus 4.3. We then rolled over to our TS3 sell there. That again would have been a nice 2.6R. We then had our large degree support, so you'd have been avoiding this TS3 sell later in the day. So a very similar picture. YM was pretty similar as well. Large degree trend down right into the lows of the day there on the 15-minute DP support. So hopefully this has been a good video showing you how to approach the day on trading the US E-minis. Remember, we don't tend to look at our STF colour. If you're an advanced trader or more experienced trader with MTPredictor, we use our higher time frame support and resistance zones and look to gauge the large degree trend as the market reverses off those. The only exception to those is when we get support initially and the market makes an outside gap down or an outside gap up. That indicates the selling pressure in this case, or if it's a gap up, the buying pressure is exceptionally strong. Therefore, if the market rallies off that, we're only anticipating the rally to be short into particularly the 9:45 to 10:15 time zone, and if it then reverses at that level without closing the gap, in other words without closing going to the previous day's close, then the market will reverse to new lows in this case, or if it's the outside gap up to new highs. That's exactly what happened there. So a very good day showing how we basically nailed all the moves in the US E-mini on the ES yesterday by all the things we teach in our training webinars, and how you can utilize the tools in MTPredictor to come out with a very profitable day in this particular example. So hopefully this has been a helpful video to show you how to approach trading the US E-minis with the tools that are available within the MTPredictor software program.